Every successful trader learns one thing early: markets move in patterns. The good news, you don't need to memorize hundreds of them. In this video, I'm going to show you the easiest chart patterns every trader should master, patterns you can spot quickly and trade with confidence. A chart pattern is just a visual way of showing how buyers and sellers are fighting for control. Once you understand these battles, you can predict where the market is more likely to go. Let's first talk about a double top. A double top is created when you have a rally followed by consolidation and then a downturn. You draw a horizontal line connecting as many of those consolidating candles as possible before the downturn, and then you wait for price to come back up to that top and create a double top. This formation is bearish. You're looking for price to then break back down after the double top is created. It looks like an M on your chart. And don't worry, later in the video, I'm going to explain how I trade each one of these chart patterns and help you develop a trade plan around them. Now let's talk about a double bottom. This is a bullish formation. After a downtrend, once price consolidates, you draw a horizontal line connecting as many of those consolidating candles as possible. Then you wait for price to come back down to that level and take the trade to the upside. When this pattern completes, it will look like a W on your charts. Now let's talk about a head and shoulders pattern. This is one of the most reliable reversal patterns. Think of it like three peaks. The middle one is higher. That is the head. And then you have a left shoulder and a right shoulder. This candlestick pattern denotes a bearish reversal opportunity. Now let's talk about an inverse head and shoulders pattern. You can see on this chart that you have the three peaks again, but unlike the head and shoulders pattern, this time the head is lower than the shoulders. This is a bullish reversal pattern. It can be found on all time frame charts, just like all of the other candlestick patterns I'm sharing with you today. Depending on the time frame chart that you're trading off of, whether it be a 5-minute chart or a daily chart, does not matter. The candlestick pattern is still valid on all time frames. Now that I've talked about four different reversal patterns, I want to talk about some momentum patterns that you will see on your charts. First up is the bullish flag. A bullish flag is created after a down move. You will often see a swift move to the upside, followed by a period of consolidation. That swift move to the upside gives us the flag pole. Then you use trend lines connecting the highs of the consolidating candles and the lows of the consolidating candles. That's what gives us the flag. This is obviously a bullish momentum candlestick formation that traders use every day to trade momentum to the upside. Don't worry, I haven't forgotten. I'm still going to tell you how I trade each of these patterns. But first, let's talk about a bearish flag. A bearish flag is created after an uptrend, followed by a period of consolidation. And then, when you get a swift move to the downside with very little pause, that is going to create a bearish flagpole. Just like in the bullish flag, What we do is we use trend lines connecting the highs of the consolidating candles and the lows of the consolidating candles, which creates that flag like pattern on your chart. A bearish flag pattern is obviously a bearish momentum play. All right, now we're going to talk about how we trade these patterns because the most important part of any trade is having a plan before you enter the trade. We need to know our entry, our stop, and our targets. Let's first talk about a double top. Remember, this is a bearish candlestick pattern. Once we have located a top after a rally followed by consolidation and then a down move, we have created our entry level at where that down move occurred. That is where I want to enter the trade. As far as my stop goes, I'm using the swing high of those consolidation candles as my stop, giving me a defined risk on this trade. Once price rallies back to my entry level, I execute the trade and then wait and manage accordingly. Next, let's talk about the double bottom. Just like with the double top, I have created my entry level by marking where the consolidation and then the breakout candle occurred, waiting for price to come back to that level before entering. As far as my stop goes or my risk on the trade, I use the swing low of the consolidating candles as my stop. Now let's talk about how to create an entry and a stop on a head and shoulders candlestick pattern. The shoulders, the head are all important in this pattern. Where the neckline is the opportunity to go short. Once price breaks below that neckline, that is your trigger to go short. As far as a stop goes or the risk on the trade, I set my stop just above the levels of the shoulders. All right, how about an inverse head and shoulders? Where do we enter and where is our stop? For an inverse head and shoulders, we're looking for a reversal to the upside. So, what we do is we draw our entry line at the neckline again, waiting for price to cross above that neckline, then going long. As far as our stop goes, I set my stop as a candle below the shoulders. Now let's cover setting up an entry and a stop on the two momentum candlestick patterns that we learned. First up is the bullish flag, looking for a momentum move to the upside. Once I get a candle break above the upper trend line, that is my trigger to go long. A stop would be a candle below the lower trend line, again giving me defined risk with a tight stop. Last but certainly not least is the bearish flag. Our entry comes once we get a candle break below the lower trend line, and our stop is a candle above the upper trend line. Now, if you really want to master candlestick patterns, then do me a favor. Don't just memorize these patterns. You need to practice spotting them in real time. Combine them with proper risk management. Define your entry, define your stop loss, and set your targets before placing any trade. That's how patterns turn into profit. All right, I need you to do me a favor. Be sure that you smash that like button and you're subscribed to the channel so you will be alerted of all upcoming videos. And if you're trading alone, join me and my trading partner, Trendy John, in the Trendy Trading Room at Simpler Trading, where we trade live every day and alert all of our trades so that you can see these patterns work in action.